Ninja here. I hope you are doing great. We've got a lot of news to go over. Got a letter from a subscriber that came from his bank. It's actually a credit union. I'm going to hold that for the second story because I want you to chime in if you've gotten a letter like this. I actually got the first story about the real estate collapsing and more proof of it happening from an attorney, and I emailed him back and I said, yeah, I'm actually going to do a video about that, but I want you to chime in after you see this video about this letter the bank sent a subscriber of mine. All right. Now, both of these are facts. These are things that are happening that show the real estate market is collapsing. I know a lot of people focus on price. I'm already seeing price drops in my area, but that's neither here nor there because we need to talk about the nation as a whole and how scary the banks, like the situation they're in right now. The first story comes out of Zero Hedge. Oh, wait, real quick before this being said, everybody has the real estate crash course. You know, hopefully everyone knows I put 2 new lessons on there. I think we're up to 31 lessons. 2 weeks ago, there's another one being put up tonight. So there's another new lesson. So if you've got the course, go check it out. All right, here we go. Zero Hedge. Zillow extends lifeline. New down payment aid targets struggling home buyers. Let me stop right there and say this. If banks are not lending money, they are losing money. End of story. Not only that, if banks have own poor performing assets like commercial real estate, mortgage-backed securities, things like that, they are doing very poorly. As a matter of fact, if banks are holding bonds, if they have a portfolio of bonds that their goal was to hold to maturity, i.e. 30-year bonds, they are in the hurt locker right now because the value of those bonds, the face value, has completely collapsed because the Federal Reserve keeps raising rates. Now, do me a favor, type 1 if you think the Fed is done raising rates, and type 2 if you think they are not done. And then I would love to hear why you believe, type 2 if they're not done, and why you believe they're not done. Because there are so many people out there, economists and investors, and they're out there trying to pump you full of hopium because they haven't pumped you full of the next shot yet. Because they want you to keep spending. They are so afraid that the velocity of money is going to come to a halt, grinding halt, just like the velocity of real estate, right? Nobody has the money, by and large, to sell their home and move up in the world, which means velocity comes to a grinding halt, and that is the exact same move, it'll cause the same type of crash in a real estate market as when the velocity of currency stops and what it does to an economy, all right? So, or to a stock market, it will cause a liquidity crisis, all right? So, why would Zillow need to come up with a new reason to get you to buy a house or a new way? Right? Think about that. It's because they are hurting. And then it's not Zillow. Zillow isn't the bank. All right. Zillow is sort of the face of this product. Then they have banks behind them that have okayed this deal to be able to get you into a house. This is the greater fool theory. All right. I cannot stress this enough. And then I'm going to get to this letter that was sent by a bank, a credit union, to a client, a subscriber, one of you. And I want to get your take on that. All right. Here we go. Out of Zero Hedge, Zillow extends lifeline, new down payment aid targeting struggling home buyers. And this is out of Zero Hedge. On Thursday, Freddie Mac's average rate on a 30-year mortgage topped 7.9%. Remember, the Ninja is calling for 8% mortgages by January. I've been calling for that for the last year. The highest since 2002, in yet another blow to home buyers and a sign the housing affordability crisis worsens. Oh, let me just add to that call. The Ninja is saying that you will see double-digit mortgage rates before you see lower rates. I know it sounds crazy, but what do you think is going to happen to real estate as it gets higher and higher? All right, on the same day, Zillow Home Loans published a press release about its new 1% down payment program to allow eligible home buyers to pay as little as 1% down on their next home purchase. This program can reduce the time needed to save for a down payment and provide another option for those who are otherwise ready to take advantage on a mortgage payment, Zillow said. Adding, the new program will first be available for Arizona properties with nationwide expansion soon after. So let's talk about this. Oh gosh, it's so easy. This is just pure logic. Banks have to lower the requirements to getting into a government conforming loan. This is exactly what happened in 2005. Oh, but Ninja, they don't, back then they had Ninja loans. I'm like, yeah, they did. And they're doing it again. Why? Because I was a real estate investor during these times. I actually bought the crap out of Ninja loans. I used them like crazy. I loved Ninja loans. You know what? Here, little side story. I had a deal worked out with my mortgage broker because the way it worked back then, and chime in, everybody that was involved in mortgages back in 2003 to 2005, back me up here. If you were able to talk a client, somebody that's borrowing money for a home, into one of these wild loans, right? You were able to get a bonus. Throw me a bonus here. And I knew this. So I went to my mortgage guy. I said, look, obviously I qualify. You know, I essentially had a revolving line of credit for a certain amount of homes, but every once in a while I had to go out and get a new mortgage, like specifically for a house, right? Rather than a revolving line of credit that I was just writing checks for homes as I was flipping them. And so what I do is I go, okay, why don't we get into one of these negative amortization loans? I'm only going to hold the loan for 90 days at most. I want to make sure that there's no prepayment penalty on it. And I want 50% of your bonus, and do me a favor, and not that I don't trust you, but you're also going to hand me the document showing me, you know, you give me half. And he did it left and right, because I could have either qualified for, and he knew it, for a, Eric's probably watching right now. He loves these stories. I would have qualified for a government conforming standard loan where he would have gotten X, but because I opted to go get the risky loan and he was getting a fat bonus check, he got X times 2. And so he would split that with me. And it was great because I also had a deal worked out with my real estate agent, because he would just hand me I wasn't an agent back then, but I knew the contracts, the purchase contracts so well. I would already pre-fill out the contracts, leave his signature out, and we would walk up to the house before. He didn't have to do any work. He would just let me in with the lockbox key, and I'd look around. All right, cool. Here's the contract. It's all filled out and signed. He would just sign his initials right there and go and get that, and he would give me 50% of his commission. I know it sounds crazy, but at closing, I was walking away with just between $10,000 and $20,000 in cash just from the commissions of my broker and my agent. But what is going on back then is the exact same thing that's happening now. And you're going to start getting into some neg-am loans. I'm not joking. There's nothing new under the sun. This thing is crashing. And remember, every single person right now that has a mortgage at a much higher rate, or let's say even people that got in at 3%, there are a lot of people in this country. And type 5, if you understand and agree with this, there are a lot of people that got into homes, the market, let's say in 2018, 2019, 2020, with a 3% mortgage. And you might think that's great, but they barely got in. They went and over leveraged themselves. They still have car payments, student loan payments. And now with the cost of electricity, groceries, in auto insurance, home insurance, all that stuff going up, they are squeezed. So it doesn't matter if a lot of people have 3% loans. You have to remember, a mass majority of people that are borrowing are always like living paycheck to paycheck. Very few of them, when you go get a bank loan, they sit there and the bank says, hey, you have to have X amount of months, 3 months worth of reserves. Do you know how many people actually use like their 401k or other things that they're probably not going to tap into just to justify that one portion of the bank, satisfy that requirement? And so you got to think back and just think logically. That's what I wrote the course about. I love it when real estate agents call me and they're like, I took your course, never ever knew this stuff. I can now market homes and take care of my clients so much better because I can see these cycles now. It's like once the logic breaks through, and type the number 10 if you think the country's logical, type 11 if you think illogical thinking has gotten worse. I mean, it's crazy, right? Well, you got to remember, as this country sort of goes nutball and just sort of loses their mind, you got to remember those people are borrowing money, all right? And they can be convinced of anything, like the shot's going to work. All right, point being is this. Zillow has to figure out how to convince you to buy a house. So they are literally dragging from the bottom of the barrel. I want everyone to own a home. I'm not joking. That is the Economic Ninja's purpose for starting this channel. I want you to absolutely crush it, but you have to do it safely to where you have a nest egg. You know, I ran into a gentleman that says he is still stressed about where he's at in life. And I said, how much savings do you have? He said, $70,000. I said, okay, what's your monthly burn rate? And he goes, about 3,000. I'm like, so you have like 22 months or no, 26 months or something like that worth of expenses if you lost your job? And it was funny, the light bulb went off in his head. And he's like, I never thought of it that way. I go, no, yeah, you should relax. Like, things are going well. But by and large, that isn't the case for most Americans. All right, so that's why I want you buying a home properly, and that's what's crazy. Rates are gonna go higher, and then they're gonna drop. But ironically, most people will not be able to take advantage of this drop in real estate interest rates because their credit will be obliterated, and they're gonna be dealing with fear because what could happen next? It's the exact same thing I went through as a real estate investor, selling off most of my portfolio in 2006, and then watching the economic and emotional downturn from 2008 to 2012. All right, it is so simple, it's crazy. Now I'm getting to a letter that this bank sent a customer, a subscriber, and you're gonna love this. But let's dive a little bit more into the Zillow thing. This program can reduce the time needed to save for a down payment. I already read that. With the 1% down payment program, borrowers who qualify can now save just 1% to cover their portion of the down payment. Let me read that again. With the 1% down payment program, borrowers who qualify can now save just 1% to cover their portion of the down payment, and Zillow Home Loans will contribute an additional 2% at closing. You have banks, and it's not just Zillow. Zillow's not a bank. They've got banks behind them, backing them. But there are other banks that have come out with this that are saying they're so desperate to get you into a loan so that they could add to their balance sheet, so they get something coming in. Because remember, a debt is their on their balance sheet an asset because of the payments they bring in. They are so desperate that their carrying costs, their customer acquisition cost is 2% of that loan. Now, I'm gonna tell you right now, if you go for this loan, you're gonna end up paying for it on the back end. Why? Because you're gonna be paying higher rates and possibly fees that are tied in behind the back end of this thing than if you came in with a government conforming 3% minimum down payment like FHA, Fannie Mae, Freddie Mac kind of loan, right? So you end up paying for this, but you got to look at the bank's upfront cost for this. This equals disaster. This shows the desperation of banks. I've already been reporting on all the banks crashing, and a lot more are coming this fall and into winter. It's going to be incredible. I'm telling you, this is exciting news. This should get you foaming at the mouth, pumped up for the future. And it's going to be about 2 years to shake all this out, so you're going to be wanting to buy. That's why I'm trying to prepare you how to buy these homes ahead of time, how to set up your personal balance sheet, how to be ready, because I want you walking in. I don't want you putting a dime down on these homes. When the banks are that desperate, they're that desperate. And I know it sounds crazy because the banks are planning on buying these up, but they won't buy up everything. And there is a way of being able to grab them because they got to do it in a way that it's not obvious to the public. All right, now let's dive into this letter from a bank. And I've got some attorneys in the, hey, if you're an attorney or a lawyer, give me a thumbs up emoji. I want you guys looking at this. Now, this is from a credit union called First Heritage. I believe that there are more banks sending out these letters right now. They're going over their compliance. As a matter of fact, I had a bank board member call me yesterday, and he wants me to do a whiteboard video of how, if you own a bank or you're part of a bank board, how to prepare for this, because I gave him like 5 quick bullet points of what to look for on their balance sheet, and he wants a full video. So I got to get that video out. But banks are doing this right now. They're in panic mode. Okay. So check this out. We're going to read this. It's not that long. It says, "Dear member, thank you for your continued loyalty to First Heritage Federal Credit Union. Now, just so you know, before I read this isn't abnormal, this letter. I believe the timing is impeccable, and I think that banks are running out to update their service terms and agreement, stuff like that, and this is what you need to look for and why they're doing it, all right? Because they see a snowball of an avalanche coming in a bunch of lawsuits. All right, thank you for your continued loyalty to First Heritage. As a member-owned financial co-op, we are always mindful that it is our duty to protect the credit union resources. As good stewards of your money, it's imperative that we stay up to date with all regulatory and legal requirements placed upon the credit union. Let me know down in the comment section below if you've gotten a letter like this recently. Because of this ongoing duty, we are adopting a new binding arbitration of claims and disputes agreement with a new waiver of class action agreement. I'll talk about this in a second. These new provisions will provide more clarity as to how legal disputes between the credit union and its members shall be resolved. These provisions do not impact a member's ability to raise a dispute with the credit union, but simply to streamline the process for doing so and set forth the venue in which to bring a dispute. Isn't that just nice? It just makes them sound just so nice and organized. They're covering their butts. Sorry, I said I was going to wait to talk in a second. We are implementing these provisions as a way to protect our member owners and the credit union by the parties working together to resolve disputes. You will have until 9/16 of 2023 to exercise your right to opt out of these provisions. Why would you want to opt out of it? Okay, in a second. If you do not opt out of these provisions, then your continued use or maintenance of your credit union will act as your consent. Well, I hope you get this letter. And think about this. Whew. It's going to act as your consent to these new provisions. Instructions on how to opt out of the arbitration are included in the arbitration of claims and disputes provision provided with this letter. Again, if you wish to be able to participate in any pending or future, now think about this, legalese, they got to repeat themselves. Again, if you wish to participate in any pending or future class action against the credit union, you must opt out via U.S. mail or email by 9/16/2023. First off, I want to tell you this. None of this is legal advice. I am not a legal advisor. I am a dude with a bro hawking a dream. But I would tell you what I would do. This is what I would do if I got that letter. Heck no will I let my bank do arbitration. This is why I would not do it. Because a bank that sets up arbitration knows that it can divide and conquer. If something comes up that the bank or credit union does illegally, it's way better for the bank to be able to have a bunch of different little arbitrators because it's a lot cheaper than going to court. And they can divide and conquer. It means that even if they are completely at fault, to me, I'm like, well, man, if they've got a bunch of arbitrators arbitrating, some of them are not going to see the way of the client. They're going to see the way of the bank, and they're going to, vote in favor of the bank. They're going to, So the way I look at it is like, no, I want to be able to exercise my rights to a class action. This is the ninja talking. I'm not telling you what to do. So then I'm like, oh crap, I want to make sure they get this information, because what if they lost the letter, they lost the information? So I'm gonna take that letter, I'm gonna sign it and go, no, I do not waive my rights to a class action. The ninja just signs it, the ninja. Then he takes a photo of it. Then he puts it in an envelope and he takes a photo of the envelope. I'm not kidding, like I'm not joking. Like I would love to show up to, some legal issue and they're like, well, we never got your letter. I'm like, well, here's the videotape, the photo, and the receipt from the post office that shows that it got to you and someone signed for it. We want to put this isn't legal advice. The ninja wants to put pressure on the banks. All of a sudden they get all these letters and they go, crap. Now think about this. The bank's going, okay, we've got like 10,000 people, accounts. We just sent out these letters. What do you mean they're coming in right now? They're getting signed. What? They're the receipt delivered? What do you mean, like you had to sign for that stuff? How many came in? 9,000? I guess we can't get away with the crap we were going to. See, it blows me away how easy it is to figure this stuff out. Now, this is just one credit union, but I got a feeling Ninja Nation's about to tell me about all these other ones coming in. These don't sue me, bro, letters from the banks. And this is what's really, really happening. Guys, there's 1,800 people on. Is there any way we can get the thumbs up to 500 right now? I'd be so grateful. We are in an epic meltdown. And I want to say it like monotone. Hey, that gets views. I'm not, oh my gosh, this is horrible. Everything's bad. Because some people love, just that gripping fear. But once you know it's coming, like the train running down the tracks and you're standing on the tracks, you go, well, I could either get hit by the train or I could step off of it. And I'll just step off. Let the crazy go by me, the crazy train, and just get back on and keep cruising. It's hard not to be stoked. It's hard not to be excited. I've lived through this before, this real estate crash. And praise God, I knew about it ahead of time. I warned everyone I could. Nobody listened to me. They all lost their homes. We didn't, me and my family. But then I look back and all I had was regrets of what I missed out on. all of the big properties, the wineries I wanted to buy, all that stuff. I was like, I wanted a farm. I'm like, I'm not going to sit on the sideline the next time. These are easily identifiable real estate, currency, and stock market cycles. And now we're in it. What did I do? YouTube turning off the lights on me. Wow, it's really dark. Point being is this. We are in a moment that if you aren't ready for this, you're going to be crying literally all the way to the bank. And then you're going to be like, crap, Ninja said, well, I didn't give advice, but perhaps, thank you, Shay, for the super chat, I should have signed that letter. I want to be able to go after them. So get ready. The panic letters are going out. We're getting excited. The Economic Ninja just had the lights turned off. I guess I better get back to work. The Economic Ninja is out.